Hello there. The last working week in July ends with the Bank of Japan disappointing market watchers by deciding to keep interest rates on hold after its two-day meeting, but will double its annual purchase of exchange-traded funds to 6 trillion yen from the current 3.3 trillion yen, and this sent the yen soaring. Meanwhile, the Federal Reserve also decided not to raise their interest rates, maintaining the ultra-low level they have had since December 2015 now. Next week will also be dominated by central bank decisions, this time from Australia's central bank and the Bank of England. Let's see what else awaits us next week in the first week of August. So we've got manufacturing numbers. These are due from Australia, China, Japan, Europe and the US. Then on Tuesday, it's Australia's turn to have us all holding our breath as to whether or not they'll make any movement at all. Now, the general consensus is that the data is still poor enough to justify the Reserve Bank of Australia cutting interest rates, which would take them below the current historic low of 1.75%. Let's move on to Wednesday and have a look, because talking of central banks, Japan will then reveal the minutes of their meeting, which took place earlier on Friday. Hopefully, this will give us more of a clue as to their methodology behind their strategy, because at the moment it's still very unclear. Then we get data on China's service sector, which increased last time. Most of Europe will also report this data too, as well as retail sales for the Eurozone, and US data as well for Wednesday includes unemployment numbers, services reports and oil supply. On Thursday, the second most anticipated report for the week is the Bank of England interest rate decision. It's widely expected to unveil more stimulus measures. This is to boost the economy in the wake of the Brexit vote, including a possible cut to already record low interest rates. On Friday, the biggest event of the day is the US non-farm payrolls. Now, various production numbers from Germany, France, Italy and Canada make up the rest of Friday's reports. Now, I'm not alone today. I've got Josh Mahoney sat right next to me just here. Loads to talk about, loads of economic data. Let's start with the RBA. So we are actually expecting a move, right?
Depends who you're asking, quite honestly. I guess that's what's important about this, and what's interesting about this is the fact that actually we can see arguments for both sides of them acting and not acting. Now, ultimately, their biggest sort of issue that they're looking at is inflation and disinflation, most notably. And we did see inflation actually tick higher earlier this week, but looking at the figures, we actually saw some other alternate measures of inflation actually move quite heavily lower. So really had an argument in both ways for a rate hike and for a rate cut. As a result of that, you're likely to see quite substantial volatility in either direction. Of course, if you have the markets all expecting one thing and that happens, generally won't necessarily see too much of a move. If you have people betting on either sides of it, that's when it gets really interesting. I'm going to bring up the chart for the Australian dollar here against the US dollar. This is the weekly time frame. What you can see essentially is we had multiple years of downtrending for the Aussie dollar against the US dollar. Now, we have actually been seeing some decent strength so far within 2016. We saw a substantial rally the first 2 to 3 months of the year, and then we saw a deterioration. Now we're moving back onto a more positive trajectory. So bearing in mind the fact that we could actually manage to sustain a quite substantial upside and not necessarily get too many pullbacks, there's a chance that we could get something quite similar now, and we could be in the middle of something quite similar now. The daily time frame shows you that we did get that pullback so far this week, but on Wednesday we got that low, that real long-legged candle, and then since then we're starting to push higher. If we look on the 1 hour chart, let's say, that starts to show that actually we clearly started bottoming out. The creation of lower highs, lower lows starts reversing, higher highs, higher lows, etc. We're now breaking through resistance here, so it does look like we're setting ourselves up for a week of strong price action. Of course, strength in terms of the Australian dollar means that the expectation would be that we're actually not going to see a move from the RBA. So really this is going to be completely dependent on what happens with the RBA decision. But just from a technical standpoint, it does look like we've got further gains to come.
Okay, closer to home, Bank of England. Obviously, last time there were high expectations that we would see a move. We didn't.
No, well, it makes sense.
Yeah?
It made sense.
A bit premature.
Yeah, well, look, they didn't have any data, so essentially it was the Bank of England saying we think that Brexit's bad for the economy and therefore we're going to act. And they didn't have any data, and they're supposed to be, an impartial, independent central bank, sensible. They think things through. They shouldn't be doing these things on a whim. So it makes sense what they did in terms of holding off. They essentially only really have a handful of data points for them to actually look at now. And bear in mind that Mark Carney said previously that they were going to take action within the summer. Now, this is the last chance within the summer, and as such, we are expecting something. The question is, what are we going to get? Now, ultimately, Mark Carney also isn't a big fan. He said in the past he's not a big fan of negative interest rates. Now, at 0.5, it means they don't necessarily have too many bites at the cherry before they're actually in negative interest rates. So you've got to think at some point they'll shift the focus more into maybe funding for lending schemes or QE. I do think QE is likely to come before long, and I think it's probably going to be quite a drawn-out affair. You're probably going to get increases to that down the line. So I do think we've got further downside to come in cable. This is cable on the 1 hour chart. We can see that at the moment we're sort of testing a key resistance level is 76.4, but let me bring it back to the daily to give you a sort of wider perspective. You can see, of course, that post-referendum sell-off. We've had a bounce since then. We've now seen some sort of sideways price action over the last, say, 2 weeks. And on the 4 hour chart, you can see that largely we have still been setting these lower highs, flatlining bottoms around about 130.64. And therefore, a break up above this previous peak around about 132.44 would be required to essentially push us into a bit more of a positive trajectory. Certainly at the moment, things are looking a little bit more bullish, and we've got this sort of triangle breakout happening at the moment. We are testing this 76.4. I personally would need to see a break up above 132.49 for me to be bullish for this market. And look, we are seeing some upside for the time being, but generally when you see some sort of big move within the market, the expectation is that we're going to see something this week from the Bank of England. Generally, markets will factor that in increasingly as we move up to that announcement. So I do think this week's going to largely see some significant downside for cable. So at the moment, it's looking like it's breaking higher, but I don't think that's necessarily going to last too long.
All right, and over in the US on the Friday, it's the non-farm payroll number. Last time it was a solid performance, wasn't it? Obviously, prior to that, we had the 38,000 that no one's managed to forget. If we do get a strong number, which we are expecting, what will then happen?
Well, look, like you said, a very good number, incredible number. It was 287, I think. And then prior to that, we had a horrible number. You net them out and you've had half decent numbers averaged over the 2 months. Look, anything around about 200k, people are probably going to think is relatively respectable because as time goes on, the so-called flack or slack within the economy starts to get used up, and you can't necessarily just continue to hit 250s, 260s, 270s every time. So 200k will be happy enough. I mean, ultimately, what kind of difference this is going to have in terms of Federal Reserve thinking? Well, look, I do think they do want to act within 2016. They have now just essentially scrubbed off the idea that sort of global risks are sort of playing into their thinking at the moment. So I don't think they're necessarily worrying too much about a Brexit. So I do think they kind of do want to act, and as such, this number could be quite important. I don't think they're necessarily going to act in the next meeting or two, but certainly the back end of the year, if we start to put together a nice run of numbers, then that could give them the sort of basis to be able to actually act. Now, this is euro dollar. What we're seeing at the moment is euro strength, that's dollar weakness, and that's essentially a play on the idea that we're not going to see a rate rise for some time out of the US. Again, similar to cable here in terms of the fact that we have been trending lower for the past couple of months odd, and you can see here that we have been setting lower highs. Now we are actually getting back towards this 111.64, and that's going to be a real crucial level. If we break back above there, that negates the more recent downtrend that we've been seeing, and that starts to look like we're going to see probably a retracement of this wider move. So there's the potential for us to see a deeper retracement up to maybe 113. Nevertheless, hasn't necessarily happened yet. I'll take it onto the hourly time frame. You can see that we are sharply moving higher. We have got, on the 4 hour, we have got this trend line resistance that's clearly been broken at the moment. So signs are that we could actually see some strength coming into play for next week for euro dollar. But really the key is to manage to clear out this 111.64 to 111.86 resistance zone.
All right, Josh, let's move on and talk about the corporate data, because we've got news from banks, motors, insurance companies, home builders as well. We're going to get stuck in with Monday because we're going to look out for media firm Trinity Mirror, the UK's leading cider and beer business as well, Heineken, and motor giant as well, Porsche. There's more to watch on Tuesday. Insurance company Direct Line weighs in. We've got builder Travis Perkins there, food retailer Greggs as well, if you like your sausage rolls, and Intercontinental Hotels as well. We're also going to wait to hear from Fresnillo as well, which has gained in value over 150% in the first half of the year. That's thanks to the surge that we've had in gold and silver prices. The company has its bases in Mexico. Procter & Gamble then, it's one of the earnings as well that pretty much has everything involved, including nappies, cleaning products, all sorts of things as well. Lots of shampoos too. Lots of big blue chip German companies to watch out for: BMW, Commerzbank, Deutsche Lufthansa. Wednesday, let's move on because it's one of Britain's biggest banks reporting as well, most exposed to Asia too. It's HSBC, and fellow financial Standard Chartered too will also weigh in. Mining giant Rio Tinto, which we're going to discuss in today's programme. A fashion retailer Next is there as well. European banks will give us a better idea as to the state of their balance sheets, and Tesla too. Now, a battery company also produces motors, of course. Let's move on to Thursday. Insurance companies report to the city, as well as sports retailer Adidas as well as in there. Nokia, which was once the most popular sought-after phone and worth twice as much at one point as Finland's entire GDP. Well, not anymore. It's completely changed, hasn't it? Because of the likes of the iPhone, of course. Today, it's worth a tenth of what it was worth at the beginning of the century. On Friday, Royal Bank of Scotland is on the list, the last major UK bank to report for the week. We've got RBA. It's now trying to avoid an expensive trial over a £12 million cash call that it issued at the height of the recession. That's the story dominating that one at the moment. Bookmaker William Hill is in there. Insurance providers, East Shore Group and Alliance as well. Home builders on the list as well, Bellway, and the fashion house Hugo Boss as well also does its fragrances. Very popular indeed. That's it for Friday. That's it for the week. Let's digest all of that just now. Josh, there's loads to talk about. It's going to be so busy in terms of the corporate. It's been a very busy month, hasn't it? What about Rio Tinto then?
Yeah, look, Rio Tinto, I guess, they're the number one iron ore producers in the world. And actually, Rio Tinto's share price, if I bring it up, you can see it has been gaining, has been reflecting the fact that actually iron ore has been doing particularly well. The last 6 months we've seen substantial gains for the price of iron ore, and that's propping up the business. Now, of course, iron ore is one of the, if not the main component of creating steel, and generally that is sort of tied into the whole Chinese growth story, and therefore when you see the slowdown, that was one of the big reasons why people thought that the likes of Rio Tinto weren't going to do too well. The prices started falling off, etc. We're now starting to see that somewhat turn around, albeit slowly, over in China. You're going to expect that that's going to really play into sentiment to be buying into the likes of Rio Tinto. So certainly the sort of reasoning for us to think that actually the worst is over is definitely there. The daily time frame we can see here is that essentially we have been moving on a positive trajectory throughout 2016. We've certainly had a couple of dips along the way. Most recently, we've had a little pullback last week, but we're starting to get back onto a stronger footing. And certainly you can notice the fact that we've got this 2262 level, which is your previous peak around about March 2016, alongside around about the low at the beginning of July. Now, crucially, we pulled back, didn't manage to take out that level, and now starting to move higher again. So that gives me confidence that actually we're going to continue on this rally that we've been seeing so far. You can see we've managed to push through this key resistance level 2487. That's certainly an interesting level to get through. So I do think we've got further to run. This is really sort of being propped up by iron ore prices. As long as they go higher and as long as China starts to show further improvements, you would think that this has further to run, and certainly this is a sort of investor's darling over the years, and I do think people are looking to get into this further. So it's going to be very interesting to see how the numbers come out.
Oh, it will indeed. OK, British financials, because they're out in force once again next week. Let's talk about HSBC, the most exposed to Asia, isn't it?
Yeah, definitely. I mean, look, the two big issues, if you're looking at sort of developed or developing, but certainly substantial sized countries, the two big issues around the world, I would say the Chinese slowdown and now what's happening in terms of the UK referendum, where you've got a UK bank, essentially, HSBC, but really it's an Asian bank, and it's completely geared towards what's happening over in Asia. So I guess they have the sort of two worries on either side, alongside all the worries that I guess every bank is dealing with at the moment. You know, the likes of sort of record low interest rates that's really squeezing their margins and their ability to make decent profits. So, you know, it's tough. Nevertheless, certainly China is improving as we go at the moment, like I said. So there, you know, there is reason to believe that possibly we have seen the worst and we could be improving, and certainly the price action starts to reflect that, because you can see on the weekly time frame we have actually got this double bottom formation. Gives us the idea that actually that 476 marked the end of that sell-off, and you can see largely since then we've been rallying. Now if we look onto in terms of the daily time frame, we can see that we have been gaining gradually since then. Essentially, you know, depending on how the numbers come out, I don't necessarily think they're going to be incredible. Look, they're dealing with a number of issues at the moment, as are all of the different banks at the moment. But certainly, if we manage to come down to this 476 level and we don't necessarily break through it, then that could be a good area for people to be buying in. We have been moving in a more positive trajectory. We've got this bottoming pattern. I do think we're sort of set in our way onto a bit more of a positive trajectory, certainly when you're counting this compared to some of the other banks that we're going to be looking at that are just solely focused really on what's happening in the UK. At least they've actually diversified.
Well, exactly. Royal Bank of Scotland then. Let's move on with that one. It's very exposed domestically, isn't it? And also taxpayer owned largely too.
Exactly, you know, and that's going to have some sort of impact on their decision making, quite honestly. I don't think people necessarily want to buy into a bank when they think that they can't actually make the decisions required to actually make them profitable. So that's an issue. Again, there's the same sort of margin issue associated with low interest rates. Then there's the exposure to the UK, the very heavy exposure to the UK. It's certainly nowhere near as sort of globalised as some of its peers. So, you know, there's reason to believe that we'll see further downside, and certainly, you know, those reasons exactly why we're seeing this divergence in terms of what HSBC share price looks like and what RBS's share price looks like. Yes, we've had 3 weeks now of gains, but this comes off the back of substantial downside over the past, say, year and a half. There's not necessarily too much reason to believe that that's going to be over. 204 previous support could turn into resistance. Take it back to the daily time frame and we can see that we have been respecting this 196. Certainly if we manage to break up above this area of resistance, 196 to 204, then that would point towards a deeper retracement into the sort of 225s, 230s. But I just think that people are probably just going to try and sell into any rally, quite honestly. So I think it's on borrowed time.
All right, Josh, we'll leave it there for now. Thank you so much indeed for all of that, and thank you for watching. It's going to be a busy week as we enter August. Where did July go? What happened there? Thank you so much for watching. I'm going to be back on Monday at 7:30 a.m. for the live show to give you an idea as to how the market's going to open. And we'll also have live shows on the Bank of England decision. That's happening on Thursday, and the non-farm payroll number as well on Friday. So it's going to be busy. See you then. Goodbye.